What's up, guys? Wanted to do a video today that I think is really important. So I got asked if I could walk through my process of how I pick stocks every day, and it got me thinking. And so we actually did a training in the server on exactly the process, step by step, of picking out the best stock to trade every single day, how to monitor it and the broader market at the same time. And it made me think, this is something so fundamental to my trading. I just don't ever talk about it though, but it's an everyday thing that I really feel that everybody should know, and I just don't think there's anybody really talking about it. So I want to do a video for you today on what our training was. So I'm going to give you a little bit of that. If you're not familiar with the server, by the way, we do trainings like this every single Thursday after the market is closed or everything's kind of died down. Go in pretty depth on a lot of these things that people just don't talk about very much. If you're not familiar with the server and you're thinking about, hey, maybe I want to learn, but I just don't know the best place to go or the best way to find these things out or what to even look at, go to our site. It's papergains.com. The link is in this corner right here, papergains.com/links. Join the community and learn how to trade. It's not just me. We have a ton of other pros in there. Chat's super active. And like I said, we do trainings like this all the time. I'm live all day. It's a great community and you learn a lot. So without further ado, here we go. This is the training that we did. It's on how to pick stocks. It's a very simple, easy to understand system that I literally use every day. Somehow, I just haven't made a video on it. Never even really thought to talk about it, but it is so important that it deserves its own video. So here we go. It's based on very old school principles and market theory, and that theory is called the Dow Theory. There's really three main principles to Dow Theory. I'm not going to get very detailed into this, keep it very high level. Number one, identify the trend of the overall market. So when I do this, and we do this on the Monday morning meetings, my first view is always SPY, QQQ, DIA. Those are the three major indices or indexes that make up the broader market. What I'm looking for there is I'm looking to see, is there a larger trend? Meaning, are all three of these things going in the same direction or not? And a lot of times they're not, and sometimes they are. Then we're going to go on to step two. What I'm thinking about, though, is market breadth. And what we're going to do is we're going to dive into something called sectors. I'm going to give you a couple tools to use for the sectors and show you a really simple way to do it, especially for any beginners out there. It's probably the easiest tool I've ever found, the cleanest looking tool, and it's free. Then we're going to look into something called industries, and we're going to identify individual stocks based on the overall trend, number one, the sector or breadth or the industries. And then we're going to identify the very absolute single best stock to trade for that day. And we're going to do this literally every day. Super simple top-down approach. Number one, broad market view. We just talked about that. Number two, going to find the strongest sector. I'll give you a tool in just a minute on exactly how to do that. Then we're going to dive into individual industries. If you didn't know, each sector is made out of a ton of little industries, and each of the industries have their own trends that they follow. Just because they're in a sector doesn't mean that the industry is actually going to be really strong. Sometimes there's an industry that's way outperforming the sector, and you better believe that I want to be trading that one, and I want to be finding that exact stock that's actually doing that. Here's the tool. There are 11 sectors in the market, and we're going to find the strongest, and we're going to look for the weakest sectors every day. We're going to identify, is it a single day move or is it a longer term trend? And I'm going to be thinking about, as I do this, is this a risk on or a risk off type of scenario? As an example, if it's utilities and staples are trending up, but maybe communications, tech, and whatever is trending down, that's an example of a risk off type of market, and I want to be looking at some of those defensive type names. So going into the tool, this is that exact same screenshot. I just did this right now. This is sectorspdrs.com, sector spiders /sector tracker. Free tool, super simple, very clean and easy. Shows you every day who's moving the most in what direction. I can actually dig into each one of these. So this is communication services. I can say who has the biggest change today, who has the worst change. I can actually filter by weight, and I can identify what are the biggest components of this sector. So for example, communication services, Meta is a 25% weighting of the sector. Google is actually these two stocks together. That's also about 25%. And then Netflix coming in third at about 5%. Might not have known that. So if communication services is having a really good day as a sector, do you think I want to trade Meta and Google and maybe Netflix? Or do I want to be trading Disney? Even though Disney is a big component, it's in a different industry of those sectors, or maybe Activision or Comcast or T-Mobile or Verizon. They're not all necessarily trending the same way, but they are in the same sector. These are different industries. Consumer discretionary, again, I can see who's having the biggest moves, what the weight is on this index. Is just a beautiful, simple, clean tool, right? So inside consumer discretionary, that's where Amazon lives. Did you know that? I don't know. That's also where Tesla lives. Did you know that? I don't know. Home Depot. These don't seem like similar type of companies, but they actually, this is their home. Different industries. That's the thing. Tesla is an auto industry. Amazon is an e-commerce industry. Home Depot is home improvement industry. You also have McDonald's. So it's important to understand the industries and how that differentiates between all these. I'm going to go back to this presentation one more time. This is on the left. This is the tickers for those sectors. So you can take a screenshot if you want. Inside each sector is the specific industry. Sometimes, not all the time, these industries have their own sectors. As an example, if XLK, which somehow I don't have up here, is technology, SMH has its own ticker. That's an industry inside technology, right? XLC, we just went through, has internet services, has telecom, has entertainment, has gaming. There's a bunch of different stuff in there. They don't all trend the same. Consumer discretionary, again, retail, automotive, restaurants, home improvement. It's a ton of stuff in there. So I need to be aware of what industries make up each sector, and I need to be able to identify what the strongest or weakest industry is based on the broader market trend literally every day. Now, it sounds like a lot, but once you've done it a few times, it's like second nature. It takes me about 5 seconds to do this, but I want to walk through that specific process one more time for you. Another tool is called heat maps. If you haven't used something like this, these are really, really important. Just an example, this one I pulled off of FinViz, which is another free site. What I did here was I put little green boxes around the sectors. Heat maps actually show you visually the sectors and the industries and the weighting and components of each one of these. It's important to understand this, but if you don't know it right now, this is one way to get yourself familiar with how these things work and what actually makes up or a sector or industry. The more that you use this, the more natural it's going to be for you when you're actually sorting through your charts to just know. I just know, oh, okay, well, consumer discretion is going up. Boom, that's Tesla, or maybe that's Amazon. Those are the first ones I want to look at. Communications is going up. Okay, I want to look at Google. I want to look at Meta. Maybe Netflix is lagging. I want to go there. Maybe industrials are going, and I want to look at GE, Boeing, Caterpillar, Deere. Those are my go-tos. You may not know that when you're learning. Once you have a few years of experience under your belt, you'll start to learn these things, and it becomes second nature. But when you're new, nobody teaches this stuff. So here I am teaching you this stuff. This is how you learn it. All right. Now, what do you do once you have a broad market trend? That's a good question. We're just repeating the same system. Identify the strongest and the weakest industry. Then I want to identify the leader and the laggard inside that industry. What does that mean? So who's making the moves right now? Who's making the moves first? And who hasn't made the move that might be making a move the following day or maybe right after? These are very dependable type trades. The best trade setup that you can get is the one that's making the same move in the same day, that has the same exact setup as the sector. I'll give you an example or two of that. We want to identify which one of these inside this industry maybe has more room to go. Sometimes it's better to go for a laggard if the trend is a couple days old or a day old, right? Something like that. Something that hasn't made the move yet, but the overall broad trend is already going. Or maybe the broad trend is clear, but there's some that have made clear moves already, and I want to maybe take the trade that is likely to come right after. That's if there's a very clear trend. A lot of times it's a neutral market, and maybe the trend is flat and to the right. In that event, I want to think about something called market breadth. So what does that mean? It means that money is always in motion. As a trader, our job is literally just to follow the money. That's all we do every single day. Like your buddy says, there's always a bull market somewhere. The thing is that it's really true. Money's in constant motion. All our job is to find out every day, where is it going, and follow it. I do that by identifying a trending industry. And if you do this every day, you'll notice a general market rotation. When you have multiple days of certain things trending, maybe you start to see a trend shifting over time. You will see that, but you'll only see that if you're doing this on a daily basis. This is why it's so important to understand this and to actually do it. Be aware of your surroundings. Don't get caught in the weeds. If you're not doing this, then you will get caught in the weeds. You're stuck on your one stock. You're revenge trading it every day, waiting for the move to happen. Meanwhile, you're missing 10 other trades that have just gone right by you. That's huge opportunity cost. So we're going to look at the sectors, find the weakest stock in a broader downtrend, find the strongest stock in a broader uptrend. And as we're doing this, all you're thinking, we're just following the money, right? That's all we're doing. All right. I promised a trade. So here's one. XLI, this chart. So here's the chart of the industrial sector. It looked like it was getting ready to rip, right? In the pre-market. So in the pre-market, you could start to see this going, right? If you knew, okay, in the industrial sector, who is going to be the biggest components? XLI is industrials. I can sort this by index weight. Okay, Raytheon, Honeywell, Caterpillar is a typical trader for us. Boeing is another one. Deere. So I'm sorting through, let's say, these first few. I don't really trade Raytheon or Honeywell, sometimes UPS. I'm an options trader. Remember, we prioritize what we're trading by that vehicle's liquidity. Option liquidity, it's going to be Boeing first, then CAT, and so on. My first chart is going to be Caterpillar, right? As we're going, when I see Caterpillar, this actually looks almost exactly like this day, right? So this is the day that the industrial sector was starting to move. On the left-hand side, I have the cursor synced. So this is the day that the industry was moving. This is the day that CAT moved. Same day, same setup. When I can get the underline, meaning the thing that I'm going to trade, to match the same setup as the sector or the industry, that's your best setup. These are your like maximum confluence that you're looking for. These are going to be your most dependable trades. Then we talked about lag. A good example of a laggard was this day. So Boeing, so this is the day here that the sector moved. Boeing did have a little bit of a move right here, but it didn't actually have the big move until the next day. So this is the next day on Boeing. It followed. This is a good example of a laggard. If I missed the first trade, I can look at the sector and maybe it's going to have a similar kind of move. Boeing was the immediate next day. I can expect that these will actually start to move in the same direction of the industry or the sector if they haven't yet. And sometimes if it's early on, like this might be an early on move, then right now I just want to stick with the leaders in the sector and just know, okay, well, the others should follow. If I get a little extended on some of the leaders, that's when I want to start looking at the laggards. Sometimes we talk about this in terms of like alpha or beta. Who has the most alpha? Who has the most beta? Later on in your trend, you want to look for those higher beta tickers or underlines, the ones that make the bigger outsized moves, or maybe a little bit later. Also, we're like, if it's early on in trend, Apple is the first to move, except sometimes if it's a downtrend, then Apple will typically be a laggard, and you just have to know that, but after a while you will. Then I still want to take maybe a short on Apple. They're typically, the last general to fall. So keep that in mind. Use the sectors, use the industries as a tool for your trading. All I'm doing is I'm just looking for where's the money going. I want to find the weakest stock in an overall downtrend. I want to find the strongest one when all the markets are trending up. I always want to be aware of my surroundings, and I don't want to get caught in the weeds. And this is exactly how we do it. So I hope that helped you guys. This is something I do on a very regular basis, literally every day. Like I said, hop in the server. We're always here to help, and appreciate you watching. See you later.